Hello, and welcome to this follow-up presentation to the one that was included within the May edition of In High. As members know, the EGM has now been called for the 28th of July, with the board unanimously recommending that members now vote to exit Casc. This presentation is to explain how that will be achieved and what the estimate cost is. To members, all I would say is it is a decision about the future of the club and whether we have the ability or not to actually manage our own future. Casc has its constraints, as we all know. The plan now being laid out to you is how we can get ownership of the club back in our own hands. What this presentation covers is the key issues, some of which are a recap of what's been explained before. The financial projections being in and out of Casc, so far as one can tell, looking forward 6 years. These figures you will see include draft numbers for the year ended 30th of April 2022, plus the budget for the current year and 5 years beyond that. There is then, for members' information, indications of what other clubs in the area are charging, both by way of full and 5-day membership, by way of joining fees, and also for visitors. Then it's explained how we would actually exit Casc and what that cost is. Just to recap on Casc, as a business, it requires £1 million of income from people playing golf, be that subscriptions from members or from visitors, both individuals and societies. As we all know, Casc means a limit on full subs at £1,612, a ceiling we are already at. We cannot charge any joining fee because of this limitation. We cannot put anything on a bar card or any other covering cost. And what we do know from discussions with HMRC and our advisors is that there is no indication of any likely increase in that subscription rate, nor is there actually any exit rule as being part of Casc. As a business, like everybody, we're seeing costs rising on all fronts, quite considerably in some cases. Therefore, whilst the club has done well in the last 2 years to the end of April 22, with no flexibility on subs, that reliance has fallen totally on visitor income, where we've achieved £291,000 in each of the last 2 years. So the decision is very simple. If we stay in Casc and members vote as such, then an increase in pay and play visitors will be inevitable, or our survival will be in doubt again. Out of Casc, yes, there will be an increase in subs, but we will have independence. We will be a private members club and in control of our own destiny. Over the next 5 years, you can expect subs to be realigned with the marketplace, but then again, they've remained largely unchanged since 2014, going up barely £100. The next few slides therefore set out some financial information, but the board's strategy is to recommend that members vote to exit Casc. This slide is an update of the one shared with you in May, with a 5-year forecast both in and out of Casc. What I've also added in for your information is draft accounts for the year ended 30th of April, which show the club succeeded in making a small profit of £25,000, although 14,000 of that relates to furlough and grants post-COVID, so just about breaking even. And that is after very substantial and over budget visitor income of 291,000 and also very high levels of income through the bar and catering. More about the year-end figures will obviously be provided to members in due course. There is then the budget for the current year, which is forecasting a loss of 24,000, very much down to the fact that the members' subs, whilst increasing, will not offset the expected decline in visitor income. The remaining figures are, as was shared with you in May, with a cumulative profit through to the final year on the right-hand side of 207,000 if we leave Casc, against a loss in excess of £250,000 cumulative if we stay in Casc. I have to be honest and say that a lot of these costs are probably on the conservative side and likely to be materially increased given the inflation we've seen coming through in the last few months. What is clear, however, is that staying in Casc is going to put enormous demands on the business, either meaning we'll go bust or we will have to undertake further asset sales. This slide is simply to give you a feel of how we compare to our competitors in this area, all private clubs, with only Shirley Park being the remaining club in Casc. Langley Park, as many of you know, has now left Casc, with its subs rising from £1,612 for a full member to £1,895. The board is currently proposing that subs will rise from the 1st of November to £1,750, and with a joining fee of £750. Some members are arguing that we should go for £1,800 or more, but the board is anxious to ensure that there is as much a phased basis of increasing subs as members can justifiably cope with in these difficult financial times. So what is the exit plan given the absence of any ability under Casc rules to actually leave? The only way back to non-Casc status is to break the rules, and that is achieved by breaking the subs limit, i.e. by going to £1,750 with effect from 1st of November 2022. There is no penalty, as has often been discussed, as there is no means of formal exit. Leaving the Casc regime deems that the company sells and repurchases the property assets simultaneously, and thereby crystallizes any chargeable gain between the base costs of the business, i.e. that when it was originally purchased, plus any improvements and indexation over the full period, and the current market value. For Cramhurst, that means we have two properties to consider, being the clubhouse, which is in the books at 1.24 million, but has recently been valued as a business operation at £800,000, and of course the cottage at 4 Crown Road, which is in the accounts of £466,000. Our advisors, Lou Crofts, have worked these figures out for us, and I will explain more of that later on in this presentation. The important dates to recognise are that it starts from April 1982, when indexation is then allowed, 30th of December 2017, when there is the end of indexation, and the planned exit date, the 1st of November 22. These are the two calculations which I know many members have been anxious to see, and have been calculated by Lucroft Hodgson Dawes, accountants who are well experienced in Casc rules and also advising all manner of sports clubs in leaving Casc. The clubhouse, which was purchased back in the 1970s, has been worked through such that there is actually a chargeable loss of £90,000, and figures 1 to 6 explain how that is. So as such, there is no chargeable tax payment due on the clubhouse. It is different in regard to 4 Crown Road, which has obviously materially increased in value, and which, even allowing for indexation and repairs to the property which have been done, there is still a chargeable gain, although with the offset of the 90,000 loss from the clubhouse, the estimation from LHD is that we will have an £82,000 tax payment to make. That will not be payable until the end of 2023. The process, therefore, is that if the EGM passes the resolution proposed to exit Casc, we will then write to the HMRC and advise them that with effect from the 1st of November, our subscription rates are changing, and as such we will be breaching Casc rules. Based on what's happened at Langley Park, there will be a simple acknowledgement to say that we are no longer in the Casc regime. We will obviously have to notify the council as well and start paying the full rate of council tax, which is approximately £50,000 a year, of which 80% has been discounted so far. All existing members' subs will not be increased until the 1st of April 2023, and the tax, as I've already said, will be payable at the end of 2023, early 2024. It's a fair question, could the 82,000 figure change? Yes, it could. There is some slack in the valuations on the clubhouse, which could reduce it slightly, but equally we could see a slight increase based on the value of 4 Crown Road. But it's worth bearing in mind that this is not a tax payment that's effectively lost. What it does is realigns the value through to 2022, so that if we have to sell, say, 4 Crown Road in a few years' time, then the effective capital tax charge on the gain will only be from 2022. In other words, we're kind of paying it up front. The remaining question, therefore, is how do we afford £82,000 when it comes to be paid at the end of next year, early 2024? Well, we have time to build up a cash reserve, which, whilst frustrating, could mean reining back on some of the expenditure on the course in the short term. But we already have probably £25,000 set aside in the reserve account towards that payment. Our bank loan is decreasing slightly quicker than it was a few years ago, and by the end of 2023 should be down to 210,000. I've already raised the issue with the bank to say we may want to increase that back to £300,000, or alternatively do it via an overdraft until the 2024 subscriptions come through. We could look to raise a loan on 4 Crown Road and release £100,000 and keep the asset, or we could, of course, sell 4 Crown Road and then have a substantial sum for investment around the course and the clubhouse. There is still the garden at 4 Crown Road, which we believe to have a value in excess of £100,000. And of course, and it wouldn't be the first time in recent years, we could seek some subs early from members to support our aim of independence early in 2024. Finally, and it is very much in my view a final option, we could look to raise debentures from members, paying, say, 3% or whatever the current rate is at the time by way of an interest return, but it would be unsecured. I'm not in favour of this. I would much rather we reduce our borrowings than increase them, but it is an option. The important thing to bear in mind is that the board will have several alternatives to meeting this payment. So that really is the final presentation in regard to Casc and the board's desire to get a members' vote in favour of exit. If you have any questions, please send them through to me by email. That's at iancollard@btinternet.com, or of course raise them at the EGM. The vote will include proxies as well as a written vote on the evening, and I can only reiterate the board is looking for members to support this strategy. It's the future of the club. Thank you very much for your attention.